Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 26th of October. Starting off with Asimilar, which still trying to work out what the trajectory is here. We did break that line of resistance there from July. That was done around the 36 pence level, above the 50-day moving average to start the week, and also now poking above the 200-day line, which is rising around 41.5 pence. So looking good on that basis. Looks as though we could hit the top of that trend channel from back in August as high as 50 pence over the next couple of weeks, and especially if we can remain above the initial October resistance around 40 to 41 pence. So slightly improving position there at Asimilar at the moment. Moving along to stock which has been slightly frustrating to say the least, Canadian overseas. Finally seeing this actually breaking and doing something nice, which is breaking that line of resistance there from September. That was around the the 28 pence level. Had a minor bear trap below the old September support, so just below 27 or 20, so call it 28 pence. And the shares have spiked up from there. Also some bullish divergence, i.e. we had the lower low for October, but the RSI is traced higher, so that is helpful. Probably want to see the RSI above 50 and a decent end of day close above that broken support line, broken resistance line rather. That would then point us back into the mid 30s. Best case scenario target at the moment up to the low 40s at that August resistance line projection, but still early days as far as the potential recovery for Canadian at the moment. Moving along to Dev Clever, which has been also slightly sticky in the near term. Here we've had a two-day bear trap below the 200-day moving average. That was at 32 pence. That's rising now, so that is positive for the shares. What we want to see, though, is a break of that major resistance line there from July, 37.5. If we can get that, then the shares would be hopefully finally on their way towards the destination we were looking at pre the October block at 40 pence, which is up to the mid to upper 50s, but still some work to do there for Canadian at the moment, even though we've had a bear trap from below that August support, which is a positive for the shares. Stock which doesn't have such issues at the moment is Falanx, which it's amazing to see the shares starting to recover well. We broke the falling wedge there at the beginning of the month in the 50-day line around 1.1 pence, and above that we're looking for a retest of the old February resistance in 2021 peaks at around the 1.8 pence, maybe 1.9 pence by the end of next month. All that's valid while we hold above the 200-day line at 1.25 pence. So let's see if the shares can do that. A lot of basing in place on the Galileo daily chart. Here we're basically tracking sideways between a penny and 1.2 pence for most of the post-July period, but looks like the share is starting to get some traction here, helped along by a break of that the resistance line that I'm drawing at the moment. So let's say we've just broken that for today's price action of 1.3 and above 1.3, looking for at least a retest of the 1.5 pence plus area. Best case scenario target maybe by the end of the year or up to January. The top of that broadening triangle from February as high as 2.4 pence, but that's a long way away. The main thing here really is for the shares to break the 200-day line at 1.5 pence convincingly, and hopefully then that would get some momentum for the stock. Ironveld, that was I think everyone's favourite fundamental situation last week, with the big player coming in at a penny when the shares were still well below that level. We nearly hit that line of resistance that I had there from January up towards 1.45 pence. Maybe we'll do that by the end of the week, and that would be a decent result for the shares. Otherwise, I suppose if we're looking to see where the next level up might be through 1.5, then hopefully there wouldn't be much between 1.5 and 2.5. So let's see if that happens over the next couple of months for the shares. We need to hold the 1 pence area, which seems quite likely, in order to deliver the upside scenario there for the shares. On to a requested stock next, and it's Love Hemp, which has been a bit of a slow situation over the recent past. I suppose you could say that the shares are trying to sort of take up the slack, and they've done that quite well, I suppose, in the around the 2.5 pence level. We had the initial break there for the falling wedge back around 2.3 pence in August, and that went well. I mean, up towards 3.2 with nothing to be sniffed at, but current situation is looks like we're bouncing off the floor of a broadening triangle from August, and above 2.5 pence we could see a return to 3.5, maybe 3.6 pence at the 200-day moving average over the course of the rest of the year. The positive here is that both the 50 and 200-day moving averages are rising, which should provide some decent momentum for the shares and should enable them to stay above 2.5 pence. On to a stock which has caught my imagination and seems to have caught the imagination of many other people as well. Quantum blockchain, we hit our 2 pence target, and above 2 pence looking for as high as 4.5 pence, which would not only retest March resistance, but also take the shares up to the top of that rising late January trend channel, and maybe that could be seen by the end of the year. Nice to see the 50 and 200-day moving averages both rising at the moment. Next time they cross, that should be a golden cross, and as we know, the run-up to a golden cross the week or two before that is traditionally the strongest part of the cycle. So hopefully Quantum will deliver on that. Marechale is next, and with the backing of Luke Johnson, we've seen the shares do very well. What's interesting here is that when there was that initial news, there was hardly any retracement, and normally if there's no retracement over a couple of days or 2 or 3 days, it means that a stock is going to keep going up. We hit that target there at 4 pence, which was the top of the May trend channel. Above 4 pence on an end-of-day close basis, looking quite simply for a retest of February resistance at 6.5 pence, perhaps as soon as the end of the year, or maybe even sooner. Moving along to another stock which is a bit of a punter's favourite at the moment, and we're probably waiting for fresh news because we tend to get it quite frequently from mobile streams. Here looks as though the shares are in a mid-move consolidation, and while they're above 0.5 pence, looking for them to hit as high as 0.9 pence at the top of that rising trend channel from back in July. Time frame on that as soon as the end of the year. Moving along to Mycelx, which has been an improving situation as well. That's been since the break of that resistance line there from June around the 37 pence level. The good thing here is that we're looking towards the run-up to a golden cross here between the 50 and 200-day moving averages. They're both rising at the moment. That explains the quite sharp move higher for the shares. And that does suggest that we were allowed to be ambitious about what the upside here could be, up towards maybe 80 pence, which is the top of the rising trend channel that I'm drawing at the moment. And maybe that's a decent end-of-year target, but the real sizzle there, the run-up to the golden cross and in the wake of that June resistance line break. Just a couple of stocks to go now. One is Tekcapital, which has continued to re-rate, and I know it has its fans. Was enjoyable to see the gap through the 50-day moving average earlier this month. That should mean that 38 pence at the top of that rising trend channel from the summer of last year is pretty well nailed on. If you're a fan of the shares and looking for greater glory, I think we can start looking at that now, or looking for that. That would be up to 45 pence at that June resistance line projection. That might be seen even as soon as the end of next month. So looking pretty hot there at Tekcapital at the moment. Spent a lot of time trying to work out the charting position of Valereum blockchain a week or two ago. Did suggest that we were getting an echo of the February move, i.e. a move which went from around sort of under 5 pence, or at least well below 10 pence, up to 80 pence. That was delivered on a break of the 50-day moving average then in the middle of February. And we had another one of those for October. So far, the shares have done as well, or perhaps even better than they did then, even though it's from a higher base. Gapped up yesterday and have held that, and also broken the high of yesterday, especially if we get a decent close above 55 pence today. We can start to dream of a move towards 90 pence at the top of the rising February trend channel, and that could be seen maybe as soon as the end of next month, or perhaps the end of the year is a conservative time frame. The ideal scenario is that even if there is a dip below yesterday's peak, the shares don't fall below post-August resistance around the 45 pence level. So above 45, looking for 90 pence plus on Valereum. That's it from me today. More updates tomorrow.